Thank you very much for coming back. I hope you enjoyed the coffee breaks and the sun came out just as we were on the terrace. Perfect. So as mentioned before, we will now have the interactive dialogue with supervisors who will share their experiences and challenges in regulating inclusive insurance. And we'll have a very diverse set of countries on stage with different conditions and very different market sizes. Brazil, Kenya, Namibia, and Pakistan. But as we heard earlier from Hannah and also during the show of hands, we actually have supervisors from 19 different countries here. So I hope that all of you will engage very actively in this session. And the session will be led by Hennie Bester, who is director at Cenfri. Hennie is from South Africa, and he's had a very interesting career. I'm very intrigued by it. He's a qualified attorney, and he practiced law. But he also served as a member of National Parliament, of the National Parliament of South Africa, and as well in the Provincial Parliament of the Western Cape. He also held several ministerial positions within the Western Cape provincial government, and he participated in the negotiations that paved the way for South Africa's first democratic constitution. And despite clearly being a very busy person, Hennie still somehow found time to help set up the A2II. And we appreciate that because he's a true visionary, and he made multiple trips from South Africa to Europe to join brainstorming meetings and other sessions on how to establish the A2II. And we're very happy that you made the trip again, this time to celebrate the 10th anniversary, and that you agreed to moderate this panel. So if I could ask Hennie, Syed, Grace, Elias, and Maria to come up front. Thank you.
Yeah. Well, ladies and gentlemen, it is an enormous privilege to be here. It's great to be with people and faces that really have become friends over many, many years. So I'm delighted to be here, and it was no problem to make the trip, Anke. Thank you very, very much. And I want to start by paying tribute to women and men that continue to believe that insurance can and will improve the lives of people who need it, but who don't know about it, who don't understand it, or who can't pay for it. That's a huge commitment and an uphill battle in many, many ways. So I want to salute the commitment of the people in this room and many others who have, in so many ways over the years, carried this flag and will continue to carry it. And I was very interested about the comments about immunization earlier today. And I thought that immunization in many ways is of course quite similar. You need laws, you need structures, you need systems, and lo and behold, you need money to make all of this happen. And every now and then you need a really good crisis to demonstrate your value. Because very often, particularly insurance value, is not illustrated in good times. So what have we learned about our laws and our structures and our systems? And to help us answer that question, we have 4 countries that have been quite activist in this space. They look quite docile there this moment. We're going to see what they can come up with. So I'm going to introduce them a bit more fully when I ask questions to each one of them. But from this side, we have Syed Hussain. He's the director of insurance at the SUSEP in Pakistan. And you are now the director of the market development department, if I got it right. Yeah. So who said earlier there's a mandate? Well, he's got a mandate now. So we're going to ask what he's doing with it. And then there's Grace Mohamed on the other side from my neighboring country, Namibia. Grace is the general manager for insurance and medical aid funds, believe it or not, at NAMFISA. And tucked away somewhere there, and we'll find out how deeply it's tucked away, is microinsurance. And then next to Grace, we have Elias Omondi, who is an actuarial associate at the Insurance Regulatory Authority in Kenya. And they're cooking up many things in Kenya. So we'll ask, Elias is a serious accomplice in all of this cooking up. So we'll talk to him about that. And then we have Maria Alves, who is with SUSEP, who is a long experimenter in the microinsurance space. And she's the technical lead for the microinsurance section. So it's in many ways a wonderful opportunity to have all of you here. And what we're going to do is we're going to probe some of the experiments that we've done, not only to find out what has happened, but perhaps to find out why some of the things haven't happened and what could be happening in the future. And an occasion like this would not be appropriate, but also asking, what are we missing? Is there something we are missing in how we go about what we do as the Access to Insurance Initiative? So let's start with Syed in Pakistan. The first microinsurance regulations in Pakistan, now I'm going to give you one bit of data about each country. Pakistan has a population of come on, 200 million.
220 plus.
Yeah, they said 2017 was 200, now it's 220. They grow fast in Pakistan. So 220 million, just hold that figure in your head. So 2040, new framework. What has happened since then?
Yeah. Actually, in Pakistan, the journey for the microinsurance development started, I think, around 2012, when, with the help of the World Bank and the first initiative and A2II, a diagnostic review was carried out of the market and supply side. So as a result of that diagnostic review, in 2014, SECP has notified the microinsurance rules first time in Pakistan. That rules provided basically that the definition of microinsurance and the product submission requirements, the code of conduct, and similar things. But after that, there was a little bit momentum, but the real focus of traditional insurers was really not picked up for the microinsurance market. So now, then we felt a need to basically revise the microinsurance regulatory framework.
But before we get to the revision, we've picked up in a number of countries that regulators opened the door, but there are no guests. Why do you think the traditional insurers didn't walk through this welcoming door that you opened?
I think there were certain issues with the rules as well, because the microinsurance rules were actually defined microinsurance as a insurance for the low-income segment actually, and to determine a customer whether it belongs to a low-income segment is difficult, because often it's the informal sector of economy, so the proof of income is not there actually. Then actually the training requirements were quite onerous actually, which we placed on the insurers, and the different modes of training were also not recognized as such. So that's why I think these were the few reasons for which the real momentum was not achieved.
And now you're going to change it. Tell us about that.
Yeah. Actually, after the SEC insurance rules 2014, there were different forces actually which helped in microinsurance. For example, the government launched the National Financial Inclusion Strategy in Pakistan in 2014. So that's a national level forum for financial inclusion, and that was being led by the central bank. 5 committees were led by the central bank. 2 committees on insurance and pensions were led by the SECP. So many initiatives were identified in that NFIS. For example, the rationalization of the AML requirements for microinsurance products. So as a result of that NFIS, we did issue a directive in 2017, which rationalized the anti-money laundering requirements for the microinsurance products. In fact, we simplified basically. We prescribed that up to a certain limit, and if a product is only protection product, there will be a lower requirements of anti-money laundering. And similarly, in Pakistan, there is a requirement of verification from the central database of citizens, which we call NADRA, National Database actually. So that authority charges certain amount on the verification of the insurance policies. So SECP pushed to reduce that cost for microinsurance products, which that authority allows. And that committee, after that, SECP also became the member of the GIZ's MAFIN network, Mutual Exchange Forum for the Inclusive Insurance. There are about, I think, 8 Asian insurance regulators are the part of that forum. So SECP then conducted 2 MSDs, multiple stakeholder dialogues, with the help of the GIZ in Pakistan. So a lot of suggestions were also received in that MSD as well. So we collected all the input and make a new chapter in the new insurance law, specifically on the microinsurance.
And what does it change? So you've reduced your identification cost, you've reduced anti-money laundering. Both things which really actually have very little to do with the essential insurance product. That's one of the ironies of these things. So you now think you're going to get more applicants to take up the lines. What type of entities do you think they're going to be?
Basically, there's an association of microfinance network providers in Pakistan, which is called PMN, Pakistan Microfinance Network. So I think the microfinance providers are actually one of they are the potential clients for these microinsurance license. And in fact, they have shown their interest as well. Then there are insurance brokers who can be potential applicants. And then actually the technology-based other distribution channels, for example, the telecommunication companies, and like in Pakistan, the Easy Paisa, which is a branchless banking. So these are actually the potential, we think, applicants for the microinsurance license.
Are any of them currently involved in some form of microinsurance distribution?
Yeah, they are involved. They have agreement with the traditional insurers under a group contract, and they are covering their clients.
So why would they want to break their relationships with the traditional insurers and get their own license?
I think the traditional insurers are, I think, more conservative actually, and they are obviously.
Sorry, is the word conservative?
They are, I think, conservative. Right. They are actually the traditional.
What does conservative mean?
Sorry. Conservative means the premium rates are high. There are more exclusions. They are actually reluctant to simplify to minimize the exclusions, and so actually they are focusing more on their main market. Then there are other big changes which the traditional insurers are facing. For example, in Pakistan, we are pushing the IFRS 17 implementation. International Financial Reporting Standard 17, which is a huge change actually.
Right.
So we are also pushing the traditional insurers to implement that standard. Yeah. So they are already very busy with that actually. Yeah. So inclusive insurance is one of the agenda, but obviously there are many other things as well. So I think.
So when the capital rules change, you focus on that.
We have to keep focus on both things, but obviously one part of the focus is on that.
And it's interesting. You anticipate that one of the products that they want to roll out is small savings products. Tell us a little bit about that.
Sorry.
The small savings.
Yes, small savings. Actually, in one of the MSD and one of the traditional insurer which is doing microinsurance, they have said that SECP should allow the saving component, because in Pakistan under the NFIS forum, the central bank actually is pushing the mobile accounts actually, which we call mobile wallet actually. So we believe that through that mobile wallet, small savings insurance products can also be sold actually.
Also be sold.
Yeah.
Excellent. And your new market development department? What do you want to achieve with it?
Actually, there was basically previously within the insurance division there were 3 functions. One is the policy, regulation and development, and then the supervision function, and then the enforcement functions. So what has been done, actually, these functions have been converted into independent and distinct departments, and with the clear objective of market development as well. So that's why previously the name of the department in SECP was PRDD, Policy, Regulation and Development. But now the department name of my department name is MDPR, Market Development and Policy and Regulation Department. So just to give more focus on the market development.
Absolutely.
So we have actually developed a 3-year strategic plan on which we are working regarding the development agenda. For example, there are certain mandatory insurances, group life insurance, then there's a motor third-party liability insurance, then there's a mandatory health insurance. So these are the 3 insurance. 2 are already legally mandatory, but their uptake is low. Third is a new, which we are going to recommend. So we are pushing the implementation of these legally mandatory insurances, and then we are actually pushing the expeditious legal route to bring the dedicated microinsurers in Pakistan.
Right.
So we have a development agenda on which we are working for the next 3 years.
All right, great. Thank you. Grace, from Namibia. Namibia's population? Come, it was a German territory. What's the population of Namibia?
We've grown. Who said to 1.2?
Grace, what do you say? Yeah.
Who said 1 million? We are bigger than 1 million. We are 2.5.
2.5 million, right. So just 220, 2.5. Just a sense of different markets, eh? That's true, but territory-wise, they do pretty well, yeah. Grace, yeah. So you've drafted microinsurance regulations 10 years ago, and my goodness, those politicians haven't approved them yet. Why is it a lack of political will? Isn't the industry interested? What do you think is the reason for this?
And you have to bear with me because this standing thing is going to get to me with these heels. But if I go low at some
You're welcome to take them off if they disturb you, yeah.
So I think it's a combination of both.
Right.
I think parts, I would not want to say it's lack of political will. It's like Ms. Huma said, it's just the processes sometimes it takes to get legal frameworks changed on the continent, at least in my experience. And it also depends on who leads the ministry at the time. And so we had when we were ready to go to Parliament in 2014, there were elections and we got a new minister. New minister, it took him about 2 years, 3 years. Now he has an appreciation of what needs to be changed and why it ought to be changed. And so we had our first, thank God, Parliament reading in July. But it's also a very thick, it's a consolidated piece of legislation. So you can have an understanding why some political leaders have reluctance, because I think the bill is about 300. How long is it? Oliver knows. It's a thick thing. It's about 12 chapters, because NAMFISA is a super regulator. We look after 5 industries. Yeah. And therefore, there's a bit of resistance in going through such text. So I wouldn't classify it as lack of political will. But of course, there are pressure groups.
But lack of reading time, really. Yeah.
Yes. But there's certainly also a degree of inertia from industry. Yes, we had the microinsurance regulation from 10 years back. Right. It probably is outdated by now, but it certainly did not stop industry from at least experimenting, because at least whilst I'm there, I was willing to treat it like we deal with cell captors right now. It's not in the current legal framework, but yet we accommodated them in some form of some way. So there's certainly a degree of inertia from industry. Why? I think is a combination of factors. Firstly, it's a very healthy market. It's a very profitable market for the current players. We have in the general space, about 16 insurers. The top 5 account for about 70 to 80% of the market. So that already tells you, with margins, net returns of about 25 odd. I don't know where people get it on planet Earth to make margins like that. Now, if you make margins like that, why on earth would you now start experimenting with microinsurance and low-value products. So I do not think there's an incentive for those. So I do think it will require new entrants, new vibrant young entrants to come into the market to really exploit this, because if you ask me whether there's a case for it, certainly there's a case for microinsurance in the country.
So in other words, not very much innovation. And part of the reason is because they make very healthy profits right now, and because the market's probably quite small as well. It's there, but...
So yes, insurance is about scale, right? You need the scale in volumes in terms of policyholders in order to make a profitable case. That's true. But 2.5 million people, the number of permanently employed, or at least sustainably employed people, are less than 300,000. The economy is also driven by a large informal economy. That is the case for microinsurance. So scale aside, 2.5 million aside, there's still a good 2 million people that require insurance of some form or the other. Agriculture is like the second biggest sector in the country. The large populace rely on subsistence agriculture. To date, there is no agriculture product sold in the country. We've been suffering a severe drought. Anybody who's been in Namibia would know it is as white as the board behind you. It's very dry. Cattle have been dying. Crop has not been growing, but nobody had the inertia or the desire to exploit this market, which is, so there's a case despite the size of the country.
It's very interesting. Just we have a theme here coming from Syed and from Grace. Very large informal population, 300,000 employed. Interesting statistics. Africa has 54 countries. What's the average adult population of an African country? Any guesses? 12 million. 12 million adults, the average adult population in Africa. 80% on average of the working adults are employed informally. So that would mean the average employed population in an African country is somewhere between 1.2 and 2.4 million people. And that's normally the fulcrum, the start of an insurance market. So that's a very interesting condition to keep in mind. Grace, we stay with you, super regulator. You're also responsible for all the health funds. Is microinsurance now the baby that has to cry very loud before it gets any attention?
Yes and no.
Good. You must tell us about both.
Yes. Yes, because the one registrar has, of course, competing obligations. He has to worry about a pension fund whose legislation is about as old as my mother, because it's a 1952-58 pension fund law. He has to worry about microlenders. He has to worry about asset managers. He has to worry about medical aid funds and insurance. Now, if you ask him whether he must worry about pensions or microinsurance, where is the priority? So, of course, there are competing obligations on the registrar and the authority, and therefore, it does not mean it does not get the attention that it deserves, because we have drafted a microinsurance regulation 10 years ago. And it's part of the financial sector strategy, country strategy objective, that we had to really look at how to broaden financial inclusion and facilitate same. So yes and no, for those reasons.
And what do you think is the most successful thing that NAMFISA has done in the past 10 years for microinsurance?
Honestly,
yes, honestly, indeed.
In the last 10 years, we've drafted the regulation. We have pleaded with people to come into the market. In microinsurance in itself, because in parts of the continent, microinsurance is viewed as funeral. So we have a vibrant funeral market, but that's not the only arm of microinsurance. So not very much out of our own doing, but also not very much because of competing obligations in the authority and I think in the country also. But is there a desire to do more?
Absolutely, yeah.
Uh-huh.
And don't remember, you're
That's all
part of
that
the Access
matters.
to Insurance Initiative. That's a very important part of it
Yes,
as well.
and I think the last few years, because I think it's also a factor of, you ask how conservative is conservative. If the average age of management in the insurers are 50 up, you have a problem. If the average age of,
Well, you're
of the
including me now,
supervisor,
right? Yeah.
I'm not mentioning people's names. If the average age of a supervisor in the excess of 50, you have a problem. Hence why sometimes it feels like when the market comes or when the private sector comes with products, I mean, if you have a person who is 55 years old, talk about technology, I don't know whether...
So that means that your new regulations will require millennials as the CEOs
It will
of
require
microinsurance.
Elias and a Grace, because we're still relatively young.
All right, great. Thanks, Grace. Elias, Kenya, East Africa, known for innovation, digital innovation, a thriving mobile money market, hubs. Your president put out a digital strategy as part of Smart Africa a month ago. And you're about to launch what you hope to be the dynamic duo, Bima Lab and Bima Sandbox. Tell us about them.
Right. First and foremost, there's an analogy you brought that at times there's a door that no one gets in,
Yes.
and there are some countries that even don't have a door. So the customers or guests come, there's no door. For your case, there's a door and there are no customers. That's the intention of the dynamic duo. Now, before I get into the perspective, first I need to highlight the reason or basically the basis behind this. So many organizations all over the world are stuck into multi-year tight budgets that gives little room for learning, innovation, and change. And in essence, that basically takes the organizations into what we call mechanical thinking and much more into linear thinking. That basically cuts across in a way that it doesn't really spur innovation. Now, for the Kenyan perspective, there's thought leadership and a proper strategic leadership. And in that particular case, I want to recognize the board chair of IRA, that is in this particular gathering, Honorable Abdi, and also the CEO that has been instrumental into pushing this particular agenda. So the innovation agenda behind this particular name that we are calling it the dynamic duo is basically propelled by proper thought leadership, a lot of collaboration that is highly focused into ensuring that we push that innovation agenda. And in this particular perspective, I bring the word focus. And focus basically stands for futuristic thinking within this Bima Lab and Bima Box. O is basically open. So we are having an agenda of openness so that there's a door, so that someone coming from out will have a very clear, what we call regulatory clarity, because that is one of the biggest things that really impacts innovation. If there's no regulatory clarity around what customers would really want, what the innovators would really want, and what the regulator really thinks that will work in the industry, clarity has been a major issue. And that really brings into perspective what IRA role is. And IRA has a very dynamic agenda or mandate. It looks both on stability of the market, but also IRA in Kenya has a mandate of developing the market. That is something that is quite unique with the kind of legislation we have. So many jurisdictions, they look into protection side more, but for us, we are trying to create that particular balance between developing the market and also protecting the customers. And once we gain that particular balance, then we will be able to run with this particular idea, the dynamic duo. Now,
let's just go back to the innovation lab. So what will the IRA, it's going to be an IRA lab, is that right?
Right.
So what will the IRA contribute to the lab and to the startups that will be incubated there?
Now, the IRA will create a space. And this particular space, I didn't finish what FOCUS stands for, but I'll basically have to bring it in this particular discussion. Now, the IRA will create a workspace, a hub that will bring the strategic thought. We'll look into the trends into the that is happening into the market. We'll also assist the innovators with clarity around the regulations, and in case there's need to rebalance the regulatory field, the regulator will be at speed to understand what regulations would really enable this particular innovator to move into the market. Right. So it's just a space that we are going to create, and this space will provide that openness. The C is collaborative. We believe that for any new idea, without collaboration and creating an insurtech ecosystem in the market space, it will be very difficult to really be able to understand what the innovators want and to address the need of the customer. So we are going to have a very collaborative agenda within that particular insurance ecosystem. The U is the uniqueness and the university.
You persist, which is good.
Yes.
Yeah.
So we are looking into the unique aspects within the market. What unique aspects are we going to bring into the space? Yeah. What needs are these particular innovators going to address? It's not about coming up with a fancy, I would say, a product, but it should be able to address the needs that will increase the inclusive agenda within the market space. Then we are looking at the S, so solutions-oriented. So we are going to have a very solution-oriented aspect within these particular two dynamic duos. So we are calling it Beamer Box. That's the regulatory sandbox. We are looking into having a unique, we don't just want to call it a regulatory sandbox. We want something that a mwananchi, that's how we call the normal Kenyan, would be able to understand. We want to have that particular space that even a customer will come and bring in his ideas on what he really expects from the insurance perspective. Then this will create a bridge that will harness both technology, will harness the needs of Kenyans, and also will enable us to basically push this particular agenda to the next level. And clearly aligned to the Big Four agenda, that the government, through the president, has been spearheading in terms of are we providing health to the Kenyans? Are we providing food to Kenyans? Are we providing opportunities around manufacturing? And are we providing housing? So in terms of agri-tech solutions, in terms of health tech solutions, all about encompass into one harnessed insurance ecosystem that will push the agenda of the country.
Yeah. And you're planning to launch this, I think, next month, is that right?
Yes, in fact, this month. So we will be starting with a national innovation workshop that will bring that particular platform. Let's discuss. We are starting with a discussion. Where would they want to see this particular agenda going? Secondly, through the board of the regulator, the IRA, we've seen a lot of the funding basically to push the innovation hub to the next level. So, and that's why when I mentioned that if you are leading a tightly controlled budget, then you will have a linear and quite mechanical, but most of the time innovation is highly non-linear, and it will take any direction. So in that particular space, then it requires a lot of a change management, more of basically taking the regulator through what we call a change lab.
Absolutely. But can I ask you this? Don't you foresee a conflict of interest in your innovation lab? You are the referee, you are the regulator, but you also have to foster and incubate the young startups. Do you think there's a potential conflict of interest down the line there?
Right. Quite interesting question. And this is where I'll bring this analogy of the elephant and the five blind men. So
the leopard and the five blind men.
The elephant and the five blind men. Right. And this particular analogy was whereby all these blind men were taken to an elephant, and each and every person was touching different parts of an elephant. Yeah. The first person was holding the tusks, and he said, "I'm holding a spear." The next person held the trunk, and he mentioned that, "I feel like I'm holding a snake." The other person went to the stomach, and he felt there was a wall. The other person on the legs, and he said, "It's a tree trunk." And each and every person had a different idea. Now, within this particular space, we want to bring in all these people. Let them touch different parts of an elephant. Now, our role, and as I had mentioned, is quite unique role, whereby we are tasked with market development and protection. Now, within the regulatory sandbox, this is where we are going to create the balance, whereby we are going to ensure when they'll be experimenting these new ideas, it doesn't really expose the customers to risks that will harm their protection within our mandate. So that particular element that kind of gives and stops the risk that might be where the customers might be exposed. But at the same time, we want to create that particular environment. Can they go and touch this different part of an elephant and try and make an idea out of it? So we want to see who are these people who will partner with us to push this particular agenda. So we are leaning towards a very delicate balance, and rightly, as you've mentioned, then it means that we really need to look at how then do we balance these two conflicting interests. And
just finally, before we go to Maria, just give us. I mean, there are really innovative products in microinsurance products in Kenya. Give us one or two examples.
Right. Quite a number. I'll just give two examples. One of the examples is a forage index insurance, that CLIP, the Kenya Livestock Index product, that basically started some time back. And this particular product, when it started, we didn't even have a regulation around index insurance. After that, we developed a policy and a regulation around index insurance. So that's one of the product that was trying to ensure that the arid and semi-arid areas within the Kenyan space, we protected those pastoralists against risks such as drought. Interestingly, some insurtech solutions such as MTBA, that basically looks at customers saving their money in a health wallet, and from that wallet they can basically use that money to pay for their health. Quite interesting products that are coming up that are being pushed through the USSD, such as Imarisha Jamii. And basically that's a Swahili word, means that you are lifting the livelihood of a community, and basically looking into hospital cash, death, funeral, it's a funeral cover expense, basically to improve the livelihood. So quite interesting products, and still we are looking into a very interesting future, whereby currently we are looking into a completely full stack end-to-end solution around insurance. A company such as by the name Marmalade that wants to provide all their products digitally. So it's quite interesting that we are seeing a number of development coming through, and highly spearheaded by a big base on our mobile market and a mobile penetration that now currently is beyond 100%.
Right. And what's Kenya's population?
Our census just ended. So I'll give
Fresh
you
off the plate, yeah.
Currently 50 million, but maybe in the next couple of months we'll give you the real numbers. We had a census happening on 24th last month, so I know the numbers are being crunched somewhere.
Yeah. Mrs. Google says 52 million, I think. Yeah. Right. Thanks, Elias. Maria. Of the 4 countries represented here, Brazil probably has the largest microinsurance market right now. You can tell us how big it is and how did it happen?
Yes. First of all, I would like to thank the HOII for the invitation to participate in this panel. And it started when we started to study microinsurance and try to implement microinsurance. You set up a consultative commission in microinsurance that was led by SUSEP and including representatives for public and private sectors.
Right.
And it helps to create a dialogue with them and to promote microinsurance among them. And also the country diagnostic that Cenfri made that time help us to understand better the market and identify all the difficulties in legislation barriers. So it helped to engage the industry in microinsurance. And also some provisions that set in our legislation as the use of remote means, the regulation of alternative distribution channels, and the simplification of the contracts. It helps them to engage in the microinsurance.
Now,
Fine.
Brazilians like carnival, you know, they enjoy fun, and they don't like to talk about death. So life insurance didn't go very far at all in Brazil for a long time, and then Brazilian companies started what is called benefits in life, with capitalization and other things. Do you want to tell us a little bit about that innovation? Yeah.
Yes. Actually, nowadays, life insurance is bigger than car insurance in Brazil. The problem is with funeral insurance. Because when you talk about, if you die, you need to pay all the funeral expense, and people, I don't like to talk about death.
Yeah.
It's a bad luck, I don't like it. So you start to join, put in the products a kind of lottery, because in Brazil they love lotteries. And then this attract the low income to buy insurance.
Insurance.
It's regarding our creativity.
Yeah. So if you want to sell life insurance, add a lottery ticket, effectively. That's what happened in Brazil.
Help
now,
to improve the sales.
Now, Brazil and Latin America is characterized by large-scale distribution channels, retailers, utility companies, and others. And one of the things that you did in Brazil was to move from regulating the institution to regulating the activity. And as the insurance value chain is being deconstructed, many more people are added into it. Tell us a little bit about that, because that's had a big impact also in the power of SUSEP to actually deal with the new market conditions.
It was, and it still is, a big challenge for us, because in 2011, 2012, what happens that new distribution channels emerged in the market. And these new business models with a longer value chain start to sell insurance all over the country. But the people the employees of the retail store, they don't know about insurance. They didn't know anything about insurance. They try to gain the commission. And you had a lot of cases like retired people bought unemployment coverage. And the complaints arise, and the general attorney forbid the insurance sales in the retail store. So it caused a big problem in the country. And they called the SUSEP decided to call the insurance industry and the retail store representatives, the Consumer Protection Authority, and the general attorney together. You have to put them together and discuss how you could solve the problem.
Yeah.
And we discuss with them, and then you decided to set requirements on the activity and not in the entity. Right. So if you are distributing insurance, you should follow SUSEP's requirement. And it doesn't matter if you work in a retail store or in a utility service company, you have to follow SUSEP's requirements. But you didn't have this provision in the insurance law, but you put a provision for the insurance companies that when they do a contract with, like, for example, a retail store, you have to put in the contract that SUSEP you have all the acts of the physical office and all the contract that relate to insurance. That's why you solve part of the problem. And now you have powers to take enforcement actions against them if it is the case.
So if I understand correctly, you created a very important principle here in that you said we are the primary regulators of the insurers. We are not the primary regulators of the retailers. But the contractual relationship between the insurer and the retailer, we retain the right and the mandate to regulate effectively the contractual relationships and therefore the activities. And that becomes fundamental to dealing with a market that have broken up into multiple players.
Yes, that's true.
Right. So it's a contractual relationship that you manage there. Very, we've got lots more to ask, but let's open to the floor for now. Any questions to our team or comments? Please, just again, identify yourself.
Yeah. Thank you. Oliver Reich at Risk-Based Advisory. I have a question for Syed. You explained that microfinance companies are going to sell microinsurance products. I understand that bit. You also said that traditional insurers weren't interested. So if they're selling the products, who develops them? Is it the microfinance companies or some other company? And if it is the microfinance companies, do you regulate them in some form?
Actually, in Pakistan, there are certain microfinance institutions which are already regulated by the SUSEP, and so if they get the license as an insurance provider of the microinsurance products, so as a part of licensing, we will ensure that they should have the desired skill set to develop the products. So they would get the license as a microinsurer from us, and they will develop the products and which we will approve.
So yes,
they will get the risk.
That's, I think, the proposal. Right. So it's a new category of insurers, basically, that comes out. Okay. Right, more questions. Right at the back.
Hi, good afternoon. I'm Nayyar from Financial Services Commission, Jamaica. We are actually in the process of drafting our regulations on microinsurance. So this question is for anyone who can assist me. As supervisors, what are the challenges that you see in supervising, regulating this microinsurance industry, and what have you done to deal with these challenges?
Can I ask you? What do you think are the key market... What are the key conditions in your market that should influence your regulations?
I think actually those persons who will be offering the product to the industry, because in order to reach the underserved, you have to have persons who they will have access to, and it might not be the traditional insurance companies. If it were the traditional insurance companies, then we will be better able to supervise them. But if it's not, then the challenge is how do we ensure that they comply with whatever regulations that we have. So that's why I'm asking the question.
No, thank you. So what I understand here is the Pakistan solution up to now, and Syed, you can come in, is we license them as a new category of insurers, all these new innovative ones. Brazil says we make sure they contract with an established insurer and we regulate the contract. That's the two models we've got here. Is that correct? All right. It's interesting, but any other advice you've got to offer? Elias, are you brooding up something there?
Yeah. Right. When it comes to microinsurance, interestingly, in any developing market, the people that are are currently facing the risk, they have different forms of insurance that is not formalized. And most of the time, what the regulator comes to do is just to provide that clarity for people who might want really to offer this form of product in a way that is formalized. But most of the time, regulators are observed as hindrances rather than people that would really provide a platform for any business to work. So when you basically develop the regulations, particular microinsurance regulation, you have to generate that clarity in terms of what practices are we coming to enhance around modernizing these traditional channels of risk protection that the community has come up with, and secondly, how do they generate trust within the market. So some of the challenges may be, and one of the challenges what Grace had stipulated, time taken to get those regulations out in the market, but also in terms of the efficiencies that the opportunities that these particular regulations do provide is giving efficiency in a market space, whereby now the clients or the providers of that particular product will know what basically they need to provide to the market. It will kind of even improve and harness new companies coming through, because most of the time there's that particular fear of what the regulator might do to maybe someone who is trying to come into the market. So with that regulation, then you provide an opportunity for people who want really to engage or sell some of these microinsurance products to come into the market. But at the moment, regulation is just to improve the coordination of the system. It doesn't mean that they might not really have any form of protection, because insurance just creates that resilience within the community. So once you get a regulation, it will provide an opportunity for the players within the market to see what kind of product they can generate. They'll be able to have that particular confidence and even increase the customer scope, because the customers will have some confidence that there is some form of oversight that these particular companies are having, rather than having companies that do not have oversight at all.
Great, thanks.
Sorry,
One
Hennie.
more question?
Can I just?
Yes, Grace.
Okay, so for me, the question in itself almost indicates the mindset of the drafters, because it almost predisposes that you're already thinking about challenges. And I'm not sure whether, if your head is already focused on challenges, the kind of regulation that you will end up drafting. Because remember, you're doing microinsurance in order to include a large part of the population. And therefore, knowing that it's a low-risk product, also knowing that the value attached to it, without taking away the obligation that money must be safe and be protected. It is for the regulator to have some degree of comfort, especially if you do risk-based supervision. And if you then craft your regulation considering conduct provisions in terms of whether it's governance and reporting, you should be generally okay without sleeping at night wondering what is going on, and making sure that you do your job in the supervision once those reports come in. But if you predispose with a challenge, then the challenges, and you want to tick and make sure all those challenges are catered for, you might just craft a regulation that becomes so onerous and unattractive for the market.
Can I add
Strongly customer-centric. Yeah, Maria.
The regulation is not the only challenge. What I see is that sometimes you have all the resolutions read, but the insurance companies don't want to operate in some niches.
Yes.
And there are, like in Brazil, we have 10 million people in a microinsurance, 10 million policyholders. But you have a potential of 80 million people. So you have a huge gap. And the insurance company sometimes they don't want to operate in some fields. So it's a challenge for us how to reach these people, how to decrease the informality. If only we do only the resolution as a supervisor, because you have a mandate to develop the market. But how to do this? Only through the resolutions, or you have to set some public policies and identify some target audience that need insurance and that impact in the economy. Maybe you have to focus in a specific public and try to work with them and try to find a way to provide insurance.
So what's
them.
the current thinking in SUSEP on how you're going to reach that 70 million? If the traditional insurers aren't interested, what's your plan? You're the technical lead.
I have a plan. I have a personal plan.
Share it with us, yeah.
We have in Brazil a non-profit institution that's called SEBRAE. SEBRAE is in charge of has in charge to foster the micro and small enterprises in Brazil.
Right.
And they did a great job.
Right.
The microcredit they involved this population with the microcredit, but they don't have microinsurance. You know, they don't. They are. I think they are. The demand is ready, but they don't have products because as they are involved, they are microcredit clients.
Right.
How can I say?
So it's microcredit for small businesses?
For small businesses, but they are afraid with the insurance companies, the traditional insurance companies, because the traditional insurance companies in Brazil, they belong to the bank institutions.
Right.
So it's difficult to reach them because they don't want to involve.
Banks don't like small businesses?
Yes.
Because the credit's too small.
To compete with them with the microcredit.
Right.
So it's a way to force the microinsurance, the dedicated microinsurance
right.
with them.
And would you do that through rules and regulations?
No, you are. I personally think
yes?
that you will have to do like agreement with SEBRAE, because SEBRAE has the whole structure. You have more than 700 centers.
So they've got a distribution network.
Yeah.
Right. And they're a public institution? Are they a government institution?
They are non-profit institutions, but linked to they work together with the ministry, economy ministry.
So you've got a distribution network there.
You have already set, but
no, it's good.
You know.
One more question, and then I want to ask another question to the panel. Craig, Brendan. Brendan.
Yeah, sure.
You were marginally quicker, yeah.
It's always marginally. Yeah.
All right, fair enough.
It only takes a small margin.
Yeah.
Anyways, the question is, supervisors need to face on to the supervised and also on to policymakers. Do you recommend a single measure to really track progress so that you're communicating what's important and how your market is doing in achieving it?
How do you track your achievements and tell people about it? That's a good question. Clearly they are stumped.
Certainly not one measure. A very popular one, I think, is the penetration rate. It certainly does not work for my market.
Yeah.
For example, Hennie just said there's 2.5 million, or I said there's 2.5 million people in Namibia, but the number of policies that we have for life, largely driven by the funeral policies, about 4 million. And that gives us a penetration index of about 7%, which is ludicrous, which is factually incorrect, because it is one life that probably has a few policies on itself. Yeah. And therefore, that one measure make Namibia looks fantastic, but what we know the true penetration is nowhere close to 7%. What the other measures are, I will defer to my learned
Colleague.
friend, but certainly not penetration ratio.
All right. Will the learned friend give us a response there?
Now, it's quite difficult to stand next to Grace because I know she wants us to sit because of her height. Okay, I think importantly, we as regulators, we need to come up with a test on the policies, and in particular to do a track on each and every policy that you've released and kind of look at its regulatory impact. So we've been conducting regulatory impact on the policies and try to look at whether it really managed to give us the right perspective, because each and every policy has an objective, and that particular objective must be very clear in the mind of the regulatory authority in terms of will we achieve that particular objective. So it's not, most of the time you get that the regulators might want to draft policies that they think those policies are for the insurance companies, but each and every policy must have an objective, and that particular objective must be clear, and you must be able to understand how will you measure the regulatory impact. So you have to conduct and basically get an independent body to conduct the regulatory impact studies on each and every policy that you've released, and that will give you a feedback loop on whether it did meet its objective. And if maybe it didn't meet the objective, you need to ask yourself as a regulator, was it something that we really needed to bring out there? And if then it didn't meet its objective, what are other things that we really need to maybe propagate and discuss with the industry to push the agenda of that particular objective? So I think it should be aligned to a particular objective, and that objective should be able to be tested. Most of the time you'll get that some policies have no objective at all, and there is no proper focus in which you are releasing that particular policy that you've released to the industry. So you should be able to have a feedback loop around the policies that you are releasing.
So Brendan, that's what you call a brilliant sidestep. Well done, Elias. So, what's the population of Brazil?
2.8.
Sorry, you got it?
Yeah, 2.9,300,000.
You mean
209
million. All right, so we have an interesting thing here. So we've got two countries with very similar population sizes. Microinsurance has flourished in the one and not in the other. Why is that, Syed? What haven't you done that you should have done?
No, actually,
You're a lottery, right?
I think we are already on the way for the development, since we have made our market development department now. So we are on the way. We have actually the objectives, as I highlighted, that we want to introduce a dedicated microinsurers. Then actually, we want to make the most of the technology, basically for the purpose of enhancing the microinsurance, and then there are the legally mandatory insurances implementation. I think these are the steps which will help us.
Can I ask you this? What's the urbanization rate in Pakistan? How many people are urbanized?
There are different estimates, but it's around 30%.
Right. And in Brazil? Urbanization rate? It's 80%. It's 85% to be precise.
It's less than 10%.
That's non-urbanized. Yeah. So it's 85% urbanization rate. How many people in the lower income classes do you think in Brazil are on Facebook? The bottom two of the four.
Almost everybody in it's difficult to say because the statistics shows that we have a rate of 2 mobile phones for each person.
Right?
Each person.
So the Facebook rate in the lowest income 50% is more than 80%. Yeah. Very, very high. Yeah. So does that start to begin to explain what's happening here? To very different markets and very different strategies that you probably need for those two markets. If you would think, Syed, about Brazil that have really wrestled with distribution. That's been one of the mainstays of their regulation. I think, in many ways, from a microinsurance perspective, you're leading the world in how you're dealing with a disaggregated value chain. From your perspective, in terms of alternative distributors, because you mentioned earlier, I listened carefully, there's those new providers.
Yeah,
There's the Pakistan Microinsurance Network,
Yeah,
but there are also mobile operators and others
Yeah, yeah.
knocking on the door.
Yeah.
Do you think, in terms of how you structure this, it may not only be the dedicated new license, but it may also be on the distribution side that part of the answer is going to lie?
Yeah, definitely. I think that distribution is one of the area, and I think there are potential. For example, in Pakistan, there's a state insurer which is called the State Life Insurance Corporation, which has almost 50% of the market. So that has the branches all over the Pakistan.
Yeah.
So since that institution is a government is a state insurer, so the commercial thirst is low actually in that. So if that institution is given as a target by the government that you have to do this market, so that can also help. But that decision is beyond the regulator. That is the decision which has to be given by the government. And similarly, obviously the distribution channel is definitely the king, I think. So when we will be giving the license to the new distribution channels, basically the brokers, the branchless banking, and these microfinance institutions, I think it will help a lot.
There's one other thing that made a big difference in Brazil, and that was the legislation around contractual savings, VBGL and BGBL. Do you want to say something about that?
Yes, VGBL and PGBL, they are not rated on the low-income class, but
Exactly.
as they are, VGBL is a kind of insurance, kind of private pension.
That's right.
And as it is very flexible. Many people from the informal sector are buying VGBL because you can pay wherever you can invest wherever you have money, and you don't need a bank account, for example, to prove your income, and it's very open. So many people, the informal sectors, it's a kind of inclusive insurance because not only the informal sector, but the formal, the rich ones, they are buying VGBL.
It's very interesting. I mentioned that because good research done by Craig, I think it was some other people in the World Bank, and the FSDA in Africa shows that there are two major break points for the development of the insurance sector to go mass. One is compulsory motor vehicle insurance, once you develop a motor fleet, and the other one is contractual savings for the upper end, the employed market. And those two break points actually, until you go beyond those two, it's very difficult to develop microinsurance. So I think it's a hidden reason why I think Brazil is also perhaps far ahead of some of the other countries, because it's got a long history of contractual savings. We've got to wrap up. So I'm first going to give our four panelists their impressions, unless there's one burning question from the floor. Lemmy, yes, you have to ask a burning question. Please do.
Okay, no, it's straightforward. Thanks, Hennie. I appreciated Grace's response on talking about customer centricity.
Yeah.
And I've interacted with regulators that are beginning to become more customer centric, but I've also interacted with regulators that are a bit more institutional. So they focus really on the providers much more. I just wanted to hear from the panelists, is this a trend that is going to be feasible going forward, or are there still hesitations for regulators to become a bit more customer-centric?
Right. Hesitation for regulators to become customer-centric? Any responses?
I think not at all, because the main job of the regulator is the protection of the interest of the consumers, actually. So we are very pro-customer, I think. There's no hesitation in that.
I think as we said before, or he said before, my colleague, is a challenge is to reach a balance between the consumer protection and the insurance development. If you reach this balance, your work is done.
Right,
Yeah.
good. Great. Well, a final round then. Let's start, Grace, with you. We can get you to sit down very shortly.
Please.
Just a final word, yeah.
I think the question by the gentleman had me pondering about what other measures.
Yeah.
Because I always say my job partly is to explain and to listen. And in order to get the political buy-in or even buy-in from an authority's leadership, it's important to be able to demonstrate the impact of the work that we do and how it aids in meeting policy objectives, whether national or international. So that one will give me a bit of sleepless nights. But in the realm of inclusive insurance, and I've said this before, it's difficult to stand or to be compared to a Kenyan authority.
Mm-hmm.
He just said they have a very flexible budget. The budget is very flexible, and in order to be able to do some of these things, you do require, importantly, the financial resources and the human resources. Because in as much as we say that the regulator must be able to adjust quickly, it comes with having those two critical resources to be able to listen and understand when a tech firm comes, what it really means, and to be able to interrogate that product. And to be able to do that, you need the right people. It means you must pay for them and you must allow them to do what they need to do. And therefore, when Kenya is always held up as the poster child, I've asked this before, we must come to the party as the rest of the continent in shaping insurance, but there's something that they do right and they are unable to share or refusing to share. There's something that the Kenyans are doing right in order to have entrepreneurs come up with products like that. And I know it is beyond the legal framework. There must be something else that they're doing right to attract
You're
those
pleading for
entrepreneurs.
disclosure.
Please.
Elias, disclose.
Now, I've signed an NDA. All right. I think we don't have a free budget, first and foremost, for clarity. But basically, if you look at regulatory maturity or evolution, is that most of the time, regulators are faced with a moving target in a moving environment. And it's quite important for the regulators to ensure that they are always in that particular movement. Most of the time, with these particular moving targets around inclusive insurance, the risks that are evolving each and every day, you must always be on your toes in terms of how do we enhance and harness regulatory platforms around that. So within that, then it means that we must be on the move as regulators and harness this particular target that is always on the move. And with that, there is need to have what we call a strategic thought leadership that comes from the top. And maybe that is what some countries might be missing, because
oh dear.
And I'd want to illustrate it now.
All right.
Because with a clear thought leadership from the board and management really is something that would spur this particular move that we are seeing within the market space. So I think we need to be on the move and to basically enlighten within the new ideas that are coming through.
Well, the two of you can discuss for thought leadership this evening extensively. Maria. Maria, yeah. Any final comments from you? Yeah.
Yeah, I think when the jurisdiction share experience to help us a lot to think in our market and our development, and also keep the dialogue with the industry and with the public sector, and focus in a target audience is when you can't you don't have arms to embrace the whole country, the whole activities. It's important
Great.
to recognize what's most the priorities.
Thank you. Syed from Pakistan. Yeah.
I think when you come to forums like these, you just give again a holistic view of what you are doing and what needs to be done. So that gives you more energy and more focus that these are the areas which you can work on. One point was very good actually, that how do you measure the performance of the regulator? So I think it's a good point, and I think regulators should have self-regulation mechanism actually. Regulators, I think the governments should give regulators specific targets relating to in all the areas, including the inclusive insurance. So if there's a regular reporting by the regulator to the government, I think it will help. And I think there needs to be more collaboration between the A2II and the regulators as well, because if we are to provide annually some information to A2II, for example, so when we will be more focusing on doing the work for the inclusive insurance.
Great. Thanks, Syed. Perhaps from my side, 2 impressions from this discussion. 4 countries, very different market conditions. Our 2012 application paper parked itself on proportionality. What this discussion shows is that market conditions will always trump proportionality. So you can apply a proportionality principle in a country as much as you want to. If the market conditions are not conducive, nothing will happen. And I think we will save ourselves a lot of frustration if that concept of market-appropriate regulation is really understood. The second thing, which each one of them mentioned in different ways, is there are many new applicants at the gate. Many new people want to enter the insurance market. If you're in the payment space in Africa now, there are 2 words that will terrify you. One is Libra, and it's Facebook and WhatsApp. The moment those 2 go into payment systems, most of the banks, wherever you move on the continent, they are terrified. The same thing is happening here. And I think what are the concepts that will make sure that insurance supervisors regain, or rather, regain is perhaps too strong a word, retain control of the insurance activity? And what are the regulatory instruments that are really required to win that battle? Because a battle it's going to be. A hand for a wonderful panel. Thank you very much.
Thank you very much for this fascinating panel. I definitely learned a lot about what's going on in the different countries.